Thank you for joining today's session. We'll be getting started shortly. We do have a lot of folks signed up for today's session, and we want to give everyone a moment to get logged on and get connected so we can dive into today's session. I do want to thank you all for joining us today. I am Jasmine Garrett here with the New Jersey Economic Development Authority. Today's session is an informational overview on the NJEDA Recovery Loan Loss Reserve Fund Program. A quick housekeeping note, we do suspect that many questions will be answered in today's presentation. However, if you have any questions at any point during the presentation, please feel free to send your questions to businessbanking@njeda.gov. Today's session is being recorded and will be posted on our NJEDA YouTube pages. The slides and other resources will also be available in the next few days. Now to get us started, I will shift things over to Nye Marshall, Program Manager of Business Banking. Nye.
Thank you, Jasmine. Welcome everyone to today's info session. My name is Nye Marshall. I'm the Program Manager for Business Banking, and we are pleased to present to you one of our newest products, the Recovery Loan Loss Reserve. Community Development Financial Institutions, CDFIs, and Minority Depository Institutions, MDIs, are value partners of the EDA, and we are specifically inviting you to this info session so that your organization can be best prepared for the launch of this product. If you so happen to be attending this info session and you are not a representative from a CDFI or MDI, please be advised that this product is only available to CDFIs and MDIs. However, once applications for this product are approved, we would be happy to share the lender's contact and program information with all who are interested. Throughout the session, if you have a question, we will ask that you use the Q&A feature at the bottom of your Zoom screen so that we may answer your questions as we move throughout the session. So before we get started about the overall program, I just want to give just a snippet of the background of the work that the EDA has done to support our MDIs, CDFIs across the state of New Jersey. So during the pandemic, you may already know this, the EDA facilitated various COVID-19 support programs with over 94,000 awards approved and 710 million in support provided. During that time, the CDFI Loan Loss Reserve was implemented to assist CDFIs with mobilizing capital to micro, small, and medium-sized businesses. We had 400 loans registered for a total of 9.3 million, and with 69% of that funding going to women, minority, and veteran-owned businesses. This program was amongst the many other programs intentionally created to provide some emergency relief for small businesses, and as we continue to focus the needs of New Jersey's focus on the needs of New Jersey small businesses, we have a profound opportunity to continue implementing programs to support the recovery needs of small businesses across the state of New Jersey. So before we get into the specifics about the Recovery Loan Loss Reserve product, I'd like to give a brief overview of the SSBCI federal program, also known as the State Small Business Credit Initiative. SSBCI is a federal program administered by the U.S. Department of Treasury to support private financing to small businesses within eligible jurisdictions. With $10 billion available overall, funding was allocated non-competitively to states, territories, and tribal governments. Of the $10 billion, New Jersey was allocated a total of $255 million as per the allocation agreement signed March of this year. New Jersey has 6 programs that are federally funded by the SSBCI program, one of them being the topic of our session today, the Recovery Loan Loss Reserve. Eligible uses of the SSBCI funding require at the program level that each dollar of SSBCI capital be matched by at least another dollar of private capital. Public funding, including New Jersey state funding, does not count towards that match. The allocation of funding across programs is designed to allow the EDA SSBCI portfolio to reach a leverage ratio, private capital to SSBCI funds, of 10 to 1 over a 10-year period. The 6 New Jersey SSBCI programs are designed, again, to stimulate new lending and investment, unlocking capital for small businesses and startups that would not otherwise have access to it. These programs were also developed in alignment with the governor's economic plan, the state of innovation, in support of building a stronger and fairer economy in New Jersey, all while emphasizing the importance of having easier access to capital for small businesses. All right, so now let's turn our attention to the details of the Recovery and Loan Loss Reserve. Of the total SSBCI allocation to New Jersey, $25 million will be utilized to support the Recovery Loan Loss Reserve product. The creation of the Loan Loss Reserve will provide community development financial institutions and minority depository institutions the ability to leverage their own resources using a one-to-one match to provide financial assistance to New Jersey businesses. Again, public funding, including New Jersey state funding, does not count towards that match. The CDFIs and MDIs that apply to the Loan Loss Reserve Program and are approved for an allocation will provide working capital loans that fit within NJEDA and SSBCI requirements. The eligible working capital loans can then be registered for a 50% guarantee in case of default. So the product will allow the CDFIs and MDIs to take on more risk and do more lending by offering an expanded suite of loan products that can better serve the entities and small businesses across the state. Each CDFI or MDI can apply and opt in to participate for up to $2.5 million at the time of application. Applicants can request an allocation that is less than $2.5 million, and when applying, it is recommended that the applicant considers the amount of allocation requested and base it on the amount the organization intends to utilize. At 3 years from the closing date, EDA staff will assess overall performance to ensure the program is being utilized and to also assess the potential for an increase in allocation. The application is due to launch in the next week on May 17th, and at the time of submission, applicants will be prompted to pay the $1,000 application fee by credit card. With respect to eligibility requirements of the Loan Loss Reserve product, the applicant must be a CDFI certified by the U.S. Department of Treasury or an MDI recognized by the FDIC and provide current certification by the U.S. Department of Treasury or an FDIC documentation supporting the status of the MDI status. All entities must have small and micro business lending experience. The CDFIs and MDIs can be based outside of New Jersey, but must use the funds to service eligible New Jersey-based businesses only. The CDFI or MDI must be able to demonstrate that they have the capacity to create, run a program, and attract applicants, underwrite, and approve financial assistance through a working capital loan program that meets the defined parameters of the loan eligibility requirements stated in the memo. The CDFI or MDI must also provide a current New Jersey tax clearance certificate and be in good standing with the Department of Labor and the Department of Environmental Protection. During the application, the applicant will be required to complete a legal debarment questionnaire and will also be required to complete a sex offender certification. Now we'll look at some of the criteria around the loan guarantee. So again, CDFIs, MDIs can register eligible loans for 50% guarantees. A one-to-one match must be met with each eligible loan by leveraging non-federal, public, or state resources. The loan guarantee will remain throughout the term of the loan in case of a future default, allowing the CDFI or MDI to take on more risk and exposure and do more lending. Eligible loans must be registered with NJEDA within 90 days after the loan closing to receive the loan guarantee of 50%. The EDA would not be required to provide a guarantee for an ineligible business or ineligible loan usage. With respect to reporting, each CDFI or MDI awardee will be responsible for SSBCI reporting and compliance. Loans that meet the terms of the NJEDA Master Guarantee will be eligible under the guarantee. At 3 years from the closing date, EDA staff will assess overall performance. And if the CDFI does not utilize at least 50% of the loan loss reserve by registering enough loans, then their agreement may be reduced or terminated as per the master guarantee agreement. But this would then also allow the EDA to be able to reallocate any remaining balances that may remain to existing awardees that may need the additional support if requested. There are several eligibility requirements that must be met in order for loans to be registered with the EDA and supported by the loan guarantee. Each CDFI or MDI will utilize their own credit terms, underwriting practices, and application processes for the administration of the loans backed by the EDA guarantee. It is up to the lender to ensure that all loans are eligible and meet the necessary criteria to be eligible for the guarantee. Upon submission of the loan reserve application, you will be asked to upload the term sheet for the working loan product offered and supported by the guarantee. It is important to make sure that the product material submitted at the time of application aligns with the loan eligibility for the loan loss reserve product. The CDFI or MDI can either create a new loan product or use an existing loan product, but both must meet the eligibility requirements as shown here. Some of the terms include loan amounts up to $250,000, a minimum of $10,000. Interest rates can go up to 12%, and a loan term can go up to 7 years. The loan can include deferred payments or moratoriums or interest-only payments for up to 12 months. Collateral and personal guarantees are permissible, but not required. No fee or reduced application fees must be offered. And all the terms must meet all SSBCI requirements. In regards to the applicants, the loans can be provided to for-profit or nonprofit entities with a commercial business location in New Jersey. Credit scores would need to be under 650 for new programs created. There is a minimum debt service coverage of 1.0, and the applicant must be in good standing with the New Jersey Department of Taxation and must provide a current tax clearance certificate when the loan is registered with the EDA. No principal of the borrowing entity also has been convicted of a sex offense against a minor, which means that they would need to fill out the sex certification form. Eligible uses include working capital to be used by the business for operating expenses only. And with respect to the lending entity, CDFIs and MDIs that have received grants from the NJEDA to create lending products or provide technical assistance, for example, the Main Street Lenders Grant, cannot use this guarantee to support the same recipients of this loan program. Businesses could be served with technical assistance to support the registered loan under this program. Some examples of eligible uses include payroll, marketing, inventory, rent, mortgage, property tax, and utilities, and any other expenses that are applicable to the day-to-day operations of the business. And eligible usages would include the refinancing of debt, purchase of equipment, construction, reconstruction, demolition or alteration, repair, maintenance work, and installation of equipment costs more than $1,999.99. The SSBCI Capital Program Policy Guidelines and Capital Program Reporting Guidance will require specific certifications to be collected at the time of loan loss reserve application. The first certification to be completed by the lender is the use of proceeds and conflict of interest certification. The lender will be asked to certify that the funds from the SSBCI program will only be used for certain purposes and in circumstances where the applicable conflict of interest standards are satisfied. The second certification the lender will need to complete at the time of application is the sex offender certification, covering all principals of the lender. The form can be completed by all principals individually or a designee acting in an official capacity. The lender will certify that no principal of the entity has been convicted of a sex offense against a minor. The EDA will ask the lender to complete both of these forms annually. The SSBCI Capital Program Policy Guidelines and Capital Program Reporting Guidance will also require specific certifications to be collected from the borrower. The first is the borrower use of proceeds and conflict of interest certification. At the time of the working capital loan application or before the loan closing, the borrower will be required to complete this form and will be asked to certify that the funds from the SSBCI program will only be used for certain purposes and in circumstances where the applicable conflict of interest standards are satisfied. At the time of the working capital loan application or before the loan closing, the borrower will also be required to complete the sex offender certification, covering all principals of the borrower. Again, the form can be completed by all principals individually or a designee acting in an official capacity. And the third form to be completed by the borrower is the SETI-owned business certification. SSBCI programs are designed to expand access to capital, promote economic resiliency, and create new jobs and economic opportunity. SSBCI provides funding to support businesses owned and controlled by socially and economically disadvantaged individuals, SETI-owned businesses. At the time of the working capital loan application or before the loan closing, the borrower will be required to complete the SETI-owned business certification. This provides documentation that an SSBCI loan or investment supported a SETI-owned business. In addition to the lender and borrower certifications, there are two forms I would like you to take note of. The first is the SSBCI form for demographics related data. Completion of the SSBCI form for demographics related data provides demographic information and is optional. Loan applicants are not required to provide the requested information, but are encouraged to do so. The next form is the SSBCI Privacy Notice and Privacy Act Statement. Lenders will be asked to read and accept the disclosure at the time of application. And it should also be noted that a privacy notice and privacy act statement must be provided to borrowers when the lender collects the information from them. A sample of this disclosure is available for review in the SSBCI Capital Program Reporting Guidance and is also on the U.S. Treasury website. In addition to that, all forms and the links to SSBCI compliance will be on the NJEDA Recovery Loan Loss Reserve webpage. And now I'm going to introduce my colleague, Mansi Nayak, to go over loan servicing post-closing.
Thank you, Nai. Hi, so I'm Mansi Nayak. I'm the Director of Loan Servicing and Compliance at the EDA. So my team manages all post-closing compliance on loans and grants. So as Nai mentioned, once the master agreement is signed, the relationship moves over to post-closing. Once the guarantee is closed, a servicing officer is assigned. The servicing officer will be the main point of contact for your entire relationship for the life of the guarantee term. When you're ready to register loans, the registered loan forms, which will be included in a template of which will be included in your closing documents, can be submitted to the servicing officer. So the registration form completed with all the information, all supporting documentation as required in the previous slides that we discussed, will all be submitted to the servicing officer. The key point to note here is that there is a 90-day window to register these documents, 90 days from closing. So this entire package has to be received by the servicing officer and reviewed for registration within that 90-day window. If something is submitted past that window, it will be deemed ineligible. Another kind of key thing to note is claim forms. So if and when there is a default on one of the loans and a CDFI or an MDI is looking to initiate a guarantee payout for that portion, the claim form has to be completed. Again, a copy of the claim form will be provided in the closing package. The claim form, all the data on the form, and all supporting documents have to be provided to the servicing officer for review. Once we review the package, we move it along to our special loan management team for payout processing. There are some terms which will be defined in the master agreement in order for you to be able to proceed with the claim. One of them is the full demand of payment. So all the necessary steps have to be completed before we can take on the claim form and start reviewing it in order to pay out the guarantee. Once the guarantee is paid out, our SLM team will continue to work with the CDFI or MDI because the CDFI is still required to make best efforts to collect the debt. And if they do collect, the payments get remitted to the authority on a first loss basis. So that's a very brief overview of the post-closing requirements.
Thank you so much, Monty, for that. I appreciate it. All right. So we're going to move towards looking at the application briefly. We'll post samples of how the application will look when you go to apply. When we do launch the application next week, you'll be able to visit our website, which will be provided in this PowerPoint, to the loan loss recovery page in order to submit your application when we launch on the 17th. But before you launch or we launch, we would like to encourage you to take a look at that website and the tools that are provided there. So CDFIs and MDIs can apply to the NJEDA online. And at the time of the application, the CDFI will opt into the allocation they are seeking under this fund. The EDA will require applicants to complete an online application that will include a 1 to 3 page narrative proposal detailing how the authority's fund would be used and disclose key financial metrics such as availability of capital that demonstrate the capacity to offer loan products and other key factors identified. Prior to applying, again, it is recommended that the applicants use this application checklist. This is just a screenshot of it. The full checklist can actually be found on our website. Here are some tools and resources I also wanted to point out before I go into some of the screenshots of the application. We have the link here to our website that I just mentioned. Prior to applying, you may want to also take a look at our board memo and product specifications. We also have frequently asked questions posted, and we'll continue to update that as we get questions in. The applicant checklist is also there, and the reporting template is there so that you can expect and know what we would require you to report on for registered loans. We also have the SSBCI lender and borrower certifications on the website. We reviewed those a bit earlier. And for future questions, you can also email businessbanking@njeda.gov. And then lastly, the U.S. Department of Treasury SSBCI webpage is included here in our PowerPoint, but it will also be included on our website and will include the capital program policy guidelines and the capital program reporting guidance. So I'll briefly go through some screenshots of the application just to touch on some key things that we ask. In the beginning of the application, you'll find that we will, again, note eligible loan criteria. We'll note eligibility requirements of the CDFI or MDI, And then we'll ask you to check the box stating that you acknowledge that you have received and reviewed all of the applicant and borrower eligibility requirements as specified in the board memo and product specifications. In order to proceed through the application, you will need to acknowledge that you have reviewed these documents. One of the next screens, you'll find that you will need to identify the type of entity you are. So if you're a CDFI or MDI, you'll have the ability to select that here. If you are not either, you will not be able to proceed with the application. Once you select which entity you represent, if you select the CDFI, you're going to be asked to upload the current notice of CDFI certification, which is issued by the Department of Treasury. And we're also going to ask you to enter your CDFI certification number. If you're an MDI, you must provide the letter of MDI recognition issued by the FDIC, and we will also ask you for your RSSD ID number. The next page here will first ask you for a short 2 to 3 short paragraph description of your company, your organization, and you can upload the material here. You'll find an upload throughout the application or upload button throughout the application where you'll be able to upload any supporting documentation with respect to your request. You may upload multiple documents. You would just upload one at a time and then click upload again if you need to upload a second or third document. You'll find next that you will be asked several questions around the London experience. So we'll ask you to provide detail about your prior London experience, and we'll also ask you to upload documentation supporting that. We'll also ask you to provide documentation on how you will support the loan product through this guarantee. And we will ask you to upload your underwriting criteria, your product marketing material, term sheets as well. And here is where I just want to touch on real quick. When we looked at the loan eligibility, when you upload the product term sheet, we will look to see that the term sheet which would tell us what loan you're offering in support of this loan guarantee meets the loan eligibility requirements. So just make sure whatever you submit does align with those eligibility requirements. The next page here will ask you, is the loan product being funded through a federal funding source? With this product, the loan cannot be supported by a federal funding source or a New Jersey state source. If you select yes, you will not be able to proceed with the rest of the application. We will ask you to describe the source of funds that will be used to fund the loan product and to provide supporting documentation. We will also ask you to upload your most current lending portfolio demonstrating lending capacity. Additional information here may include marketing plan to market the product and to attract new business applicants, and also marketing materials that are in languages other than English and your organizational chart. Again, just going back to the applicant checklist, all these things are noted. So prior to applying, go through that checklist just to make sure you have everything, you're ready to apply, and we can actually review your application and get it approved efficiently. We'll ask you to provide financials, including the last 3 years of your completed federal tax returns or audited financial statements, and a balance sheet and interim statements as well. You'll have the opportunity to upload additional documentation here at the bottom. Anything that will support your request, we welcome it. You will just check off the boxes and upload as needed. The next page will allow you to submit your request amount. So we know that the allocation request can go up to 2.5 million. And we will also ask that if you have the opportunity to request a higher amount or an increase, how much more in addition to your request would you request? The next will be the SSBCI certifications. We talked about them earlier. The two forms, one is the lender, investor use of proceeds, and the other is the sex offender certification. You will have the opportunity to populate the PDF, complete it, and then upload it into the application. The next page shows the SSBCI reporting and record retention certification. We will ask you to certify that you will maintain reporting requirements as per the Master Guarantee Agreement and SSBCI guidelines. The duplication of benefits form will be your next page, where the applicant must complete for their organization, and you will certify that there is no duplicate of benefits or any other government funds used for this program. And then the next form is the certification of non-involvement in prohibited activities in Russia or Belarus. You would review the certification, select the option A, B, or C, and then sign the form. The pages following the Russia-Belarus certification will be a few pages which will include applicant confirmations. So we will ask you some questions that we ask you throughout the application, but in this case, you will certify. So one of them being, you will need to certify that you understand that the loan cannot be supported by a federal source. That's for an example. As you proceed to the end of the application, you'll come to the fee acknowledgement. We'll ask you to acknowledge that there is a $1,000 non-refundable application fee to be paid by to the NJEDA by credit card. Once you get to this page and you acknowledge it and you hit next, you'll be actually sent an email. The email will come from NJEDA fee payment request at njeda.com, and you will use the link in that email to pay the fee. The EDA will review your application only after the fee is paid. After you acknowledge this page of the fee acknowledgement, you can go ahead and hit submit or next, and it will bring you to pretty much the application submission end of application page. You must hit submit after completing this page here for submission in order for the application to be fully submitted. Once you submit, you'll know it was successfully done because you'll get a message that thanks you for submitting the application. If at that time you have any trouble or you did not get the confirmation email or this page, you can contact us at 844-965-1125 so that we can troubleshoot the issue. And that there concludes our presentation of the Recovery Loan Loss Program. I would encourage you, if you have questions now, we have a team of people here ready to be able to answer them. And we are going to ask that you use the Q&A feature so that we can capture all of your questions and be able to add them to our FAQs as necessary. So at this time, if you have any questions, go ahead and put them in the Q&A feature. If you're having trouble, let us know. Okay, looks like we do have a couple of questions that are coming through. Give it another minute. All right, I'll start with the first question. So it asks, where will, this comes from Emil, great presentation, thank you. So where will the reserve funds be held? So the EDA will hold the funds, the allocation, until or up until there is a potential default. So we would not distribute any funds until we have received your claims and all supporting documentation has been reviewed for loan eligibility. So we will hold the funds until we have a request for a distribution of the guarantee amount and it has been approved. This one comes from Glenn. Has the application form been made to public yet? You haven't seen it yet on the website. So Glenn, no, we wanted to have this info session prior to the launch of the application to give our CDFIs and MDIs a chance to prepare. The application will launch next week, May 17th.
This presentation will be shared with everybody that's on here today, though, so you can use this as a reference because the questions are literally going to be the same thing. So I literally took the example of the application, and so you can go through on your own time to understand the questions a little bit better. So you will essentially have what's needed, also the applicant checklist as well too, so you can have your items needed prior to that. But again, you know, it's going to be up on the 17th for you to be able to apply. And if you have any questions prior to that, there is a general inbox you can send your questions to or reach out to Nye as well.
And we also have here, how do we determine SETI eligibility? So I know that the capital guidelines will speak to this, but there are forms that will be provided to you and also on our webpage as well, where the applicant will be able to certify, you know, their SETI eligibility through various questions and selections.
So SETI is regarding, you know, personal information. If they want to disclose, they do not have to disclose. It's voluntary information as well too. So it's a form that they essentially would fill out. They choose not to answer that. It still needs to just be completed, and I'm choosing not to wish, you know, to send this information or, you know, disclose my race, gender, whatever that may be. But this product specifically, it's not required that you have to be a SETI business owner, right? It's just capturing, you know, demographic information, that's all. So we just ask that they fill out the form and send it back. Pretty typical in other federal resources that require that demographic information, but there's no specific target that we have to hit for this. And as CDFIs and MDIs, it's pretty much an easy target for you all to hit as well anyway. So again, it's just checking a box on a form really for us.
Again, if you have any more questions, please feel free to pop them in the Q&A chat. We also added the website into our chat box as well, so you can check that out too.
I think we're good. So good job. Yeah, thank you for everybody who joined and attended. And again, feel free to send an email or reach out to us personally as well too if you have any further questions. But hopefully people are interested and apply to this. Again, it would be a long-term relationship with us, so just make sure you pay attention to what the program really requires and the accountability you're going to take on, because it is federally funded. So we're here to address any questions, though, if you happen to have them after the fact. And thank you for joining us today. Appreciate it.
Thank you. Enjoy your day.